Have you ever watched price hit your exact fib level, hunt your stop, and then explode into a massive move without you? You're not wrong about the direction. You're just acting as someone else's exit liquidity. You see, retail traders use Fibonacci to find support and resistance, but the market makers, they use those exact same levels to find your orders. Hi, my name is Timothy Lee Rogers Sr., and inside the magical Fibonacci tool, I am handing you the exact institutional framework you need to flip the script. No more guessing, no more games, no more retail traps, just pure precision order flow. It's time to stop feeding the markets, switch sides, and learn to hunt liquidity like the pros. What's going on, everybody? Hopefully y'all doing well. Trying to get myself together. I'm trying to get my IG together. I'm trying to get my IG together, YouTube. Oh, I ain't got my lights on or nothing. I'm tripping. If you're on IG, come over to YouTube to participate in the giveaway. Come to YouTube to participate in the giveaway. All right, how y'all doing this evening, man? Y'all go ahead and do me a favor. Hit a like for the algorithm. Share this out with as many people as possible, and as many people as you think that will benefit from a giveaway such as this. Y'all bear with me 1 second, and then we're going to get to it, man. Y'all go ahead and drop something in the chat so I know who up in here. So I will know who up in here. I was gonna put it on X, but I ain't gonna put it on X because X gonna bring out the idiots. The idiots come out when you go to X. All right, man. Let me go ahead. I'm gonna get my sheet together while y'all drop something in the chat. Let me get my sheet together before we get started. Not gonna be before you long. Oh, you know what I forgot to do? I forgot to put my what's the name on the computer. Let me do that. All right. Freebie Thursday. All right. Freebie Thursday. What do we do? Name. YouTube name. YouTube channel name. All right. And email address. All right. All right. Go ahead and do this right here. All right. Copy link. Okay. Oh, where the gang at? Gang. Oh, Lord, where the gang? Oh, wait a minute. Wait a minute. I don't see nothing but one person from the gang. Wait a minute. Ain't nobody showing up for Freebie Friday on a Thursday? Hold on. I can't share the sheet yet. We gotta tighten up before I share the sheet. Let's get the pleasantries out of the way. Good evening. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. But if it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. but I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers, aka Arania Grande. That just me, Big Spider, if you don't hablo Espanol. And you are now, get ready for it. Give me a round of applause because you are now in tune to
Freebie Friday. Freebie Friday. Freebie
Thursday. Thursday. Thank you. Yes. And for those who don't know what Freebie Friday is and why we are doing it on a Thursday, well, first of all, Freebie Friday, let me get this here for you all. All right. First of all, right, Freebie Friday is, if you're on YouTube, if you're on IG, come over to youtube.com for your chance to win a free Apex account. If you're a trader and you want to try your hands at a prop firm, come over there to YouTube. Right. So what Freebie Friday is when we here in the gang on the new TLR channel, we give away Apex evals. You can win any size standard Apex account. All right, Tim, what does that mean? Well, let's go over here to Apex and let's see. All right, if we come over here to Apex, right, you scroll down and you can see that they have account types here. Where is it? Right here. They have account types here. They have standard accounts and they have no activation fees, right? Freebie Friday, every Friday until they stop giving me codes to give to the community. Every Friday. Today, we're doing it on Thursday because tomorrow is a holiday and the market is closed. So I will not be doing a price action recap tomorrow. So that's why we're doing Freebie Friday on Thursday. As you see, it says Freebie Thursday. If you look at the screen, Freebie Thursday, right? So, now back to Apex. For those who don't know, it's good for any size. You see, it says, come here, right? You see, it says any size Apex, right? Any size Apex standard account. So 25K, 50K, 100K, 150K, intraday trailing drawdown, end of day trailing drawdown. Doesn't matter. You pick. Right? You pick intraday trailing drawdown, end of day trailing down, but it has to be a standard account and the code is good for one standard account. Now, since it is a standard account and not a no activation fee, should you pass the eval within 30 days, you will be responsible for paying whatever the activation fee is. So if you want to get a 50K end of day trailing drawdown, once you pass it, you would be responsible for paying the $99 activation fee, right? Unless they have some special that makes it lower. I don't know if they're having a special on that right now, but they do have 90% off all of their evaluations now. Make sure to use BIGSPIDER at checkout. Use code BIGSPIDER at checkout to get the best deal that they're offering at that time. Right? So any size you pick, standard account, can be either intraday trailing or end of day trailing. All right? That's what's up to grabs. The more participation I get, the more generous I may feel. The less participation I get, the less generous I will feel. So, y'all go ahead and drop something in the chat so I can see who's here And while I'm getting ready to check the chat, just remember, this is another episode of
Freebie Friday. Freebie Friday. Freebie Friday. Freebie Friday.
what we got up in here. Oh man, we losing viewers like a cancer patient. You losing weight. We losing viewers. I can feel my generosity fading. Don't nobody want to pull up on a Thursday. Don't nobody want to pull up on a Thursday. Hey man, I feel my generosity fading, man. I just go into the gang and, you know what I'm saying, randomly pick some people in the gang to give it out to. All right, there ain't nobody pulling up. Oh, at holiday mode. Okay, then. It says holiday mode. Well, I guess we'll just look at price and get on up out of here then. I guess we'll shout out who. Let's shout out the faithful few. Got Yolanda, got Kim, got Rhonda in the gang. We got Hit Learn and Share from the gang over there on the tube. We got Kim all over the place. Kim over there too. We got Dirty Diana. Oh, we got DXM in the chat. I see Honey. All right. In the chat. We got Gratitude. What happened last night? I don't know. What happened last night? What happened last night? Short video when you talked about consolidating. Last night my cursor highlighter wasn't working, and it was getting on my nerve, and I had to shut that out. When I shut down the OBS, it ended the live stream. Right, my cursor highlighter wasn't working, and it was making me mad. I don't know if it's Windows 11. I don't know if it's this AMD system that I got. This is my first AMD system. That I keep looking over there like I'm looking at y'all. This is the first AMD system that I ever bought. I usually buy Intel systems. And I don't know if it's the system or if it's Windows 11. Because when my old system, it wasn't compatible with Windows 11. It was Windows 10. And when I bought this one, it came with Windows 11. So 2 variables changed. The computer changed and the operating system changed. So I don't know which one is giving me the issues. I don't know if it's the computer or if it's the operating system. But I have a slew of issues with this freaking computer. And it be making me mad. I paid too much money for it. If you own IG, come over there to YouTube. If you a trader and you interested in winning a chance to win a free prop firm account, come to YouTube, get the numbers up, because I'm trying to do Freebie Friday on a Thursday, but we hurting right now. Now, without further ado, did price do anything today that caught you off guard? Yolanda, did price do anything today that caught you off guard? Yolanda ain't even talking to me. Rhonda, did price do anything today that caught you off guard?
I did not look at the charts today. Go ahead, give me the sound. Womp, womp, womp.
No, I ain't giving you the sound. Ain't nothing wrong with not looking at the charts. You ain't got to look at the charts every day, my friend. Kim, did price do anything that caught you off guard today?
A little bit.
What happened that caught you off guard? Talk to me. Talk to me. What happened that caught you off guard?
I was trying to find the first presented fair value gap for the 10 o'clock trade in that hour. So I kind of picked the one above that instead of the one under it. And it was the one under it that the short started on that I could have taken.
So you say you was looking for the first presented during the 10 o'clock hour. So you trade on an hour by hour basis. Is that what I'm understanding? Like you trade the hourly candles like hour by hour?
I was actually on the 1 minute, getting the first presented there.
You didn't answer my question. I said you're looking for the first presented during the 10 o'clock hour. So does that mean you trade each hourly candle individually? I'm asking because if you're looking for a first presented during the 10 o'clock hour, that likely means that you're only trading that 10 o'clock hour candle. Because if you're looking for, because the first presented for the session is the first one after 9:31, right? And that's going to be for the session, the New York session. If price is trading within proximity of that, you want to keep that in mind to see how price utilizes it for the bullish or bearish narrative. But you can utilize the first presentation in every hour to hour, but you're using it just to trade in the range of that hour. Right. That's why I asked if you were trading just that 10 o'clock range once it was presented.
Yes.
Okay.
So I usually just take it to liquidity.
And it's you only trade during that 10 o'clock hour, or you just trade any hour that you pop in there, you just trade in that hour and then you're going about your way.
Yeah, lately that's been successful.
Okay. And so what did you deem to be the first presented during that 10 o'clock hour? Let me share my screen. Let's get to the screen here. All right. And what did you deem to be the first presented? Because you said it caught you off guard. So let's go to the 10 o'clock hour. Let's go to today and let's just go to 10 o'clock on a one. You say 1 minute, right? You was on the 1 minute chart.
Yes.
All right. Oh, I'm sharing my screen inside Zoom. Let me share my screen over here. All right. I was sharing my screen inside Zoom. I'm sorry, YouTube. I was sharing my screen inside Zoom. Uh-oh. There you go. All right. Now I'm sharing my screen the proper way for YouTube. I guess I probably could share it for both of them. I could share it for Zoom too. I just got to remember to share it twice. If I share my screen on Zoom, does it look better to y'all when I share my screen on Zoom, or it don't make a difference? Like I'm sharing my screen right now. Does it make a difference when I share the screen as opposed to when I just be using the OBS?
I don't see the difference.
There's no difference.
Yeah, I don't see it either.
All right, let me stop sharing that then, because I have to remember to unshare it. So we're just gonna stick with this right here. All right. If it ain't broke, don't fix it and let it go. All right. Let me check my sound real quick. All right. Check my sound real quick. Yep, sound working. Okay. So we go to the 10 o'clock hour. Go to the 10 o'clock hour. The 10 o'clock hour, baby. This is 12 a.m. Where am I? Did I just not? Wait a minute. I should go to. Oh, it didn't take the 10. I'm like, wait a minute. Jesus, close enough right now. All right, 10 o'clock hour right there. Go to the 10 o'clock. I still got some stuff on my chart from today. Some stuff that little Timmy was watching. Say yay. Bars.
Let him cook.
All right, so 10 o'clock hour. Okay, got your 10 o'clock hour here. Now, what did you choose as the first presentation? What time? What time on the candle? Kim, did
I've got to go to my chart. Give me a second.
you're not looking at mine. You can't remember. You can't remember what you did. Oh, this is 5 minutes. Let me go to 1 minute. I thought I was on 1 minute already. You can't remember what you did. 10 o'clock, 10:13, 10:04. You can't remember what you did. While we talking about this with Kim, I'm gonna share the giveaway sheet. I'm gonna share the giveaway sheet. If you're on Instagram and you're a trader, come over to YouTube to join us for your chance of winning a Apex account, Apex prop firm account. Come on over there to YouTube to participate in the giveaway. Why don't you come over and join us even? Come over, suffering succotash. Come over even. Let me get this link. Hey y'all, I think Kim fell off the face of the earth.
No, I was waiting for you to finish. 10:04.
10:04. Okay. 10:04. Gang. The link to the giveaway sign up is in the chat, gang. Y'all better watch J-Rock. J-Rock got a lucky rabbit foot around his neck. J-Rock got a lucky rabbit foot around his neck. Say 10:04. 10:04. Let's come here. Let's find 10:04. That's 10:04 right there. Okay. So let's mark it out. 10:04. And then while I'm marking it out, let me know again. Remind me again what you said happened. What caught you off guard? What happened here? You said that it what?
It went off the one under that, which isn't the first, but maybe it is, the first for some reason.
Okay. All right. Remember what, just looking at it here, right? Remember what Michael teaches, right? Whenever we're looking for the first presentation, we're looking for the first presentation made with displacement, with a purpose, with a moving. And remember what I always stress is this is the first imbalance that's created, right, in this move down, so that if we got back above it, this would be your high probability inversion fair value gap. But whenever we have a area, right, of efficient delivery like this right here, right, you want to choose the first presentation as the first imbalance that's leaving that area. Like here, we came down here, right? You see how this wick, the wick was trying to escape, and the body actually, right, closed below the lowest close. So the body of this imbalance is leaving this area. This one here, the wick didn't even try to escape, and the body didn't even try to escape. So this one is still inside of the efficiently delivered area. And once we leave this area, right, we don't want to see price digging back up into this after it becomes a balanced price range. So your first presentation is going to be, you're going to look for, now if this was one big red candle, right, then you know what I'm saying, your first presentation would look like this if it was just one big red candle there, because we're starting to leave this area of consolidation, right? And that's what you hear me talk about when I be like, this is our breakaway gap, this is our fair value gap. Whenever we be in an area, I'm pretty sure you've heard me say that like plenty of times. I'll be like, this is our breakaway gap, this is our fair value gap, because that's the area where I'm looking for the algorithm to come back to offer fair value. And as we see here, it came back to that fair value gap, the one that was leaving that area right there. Make sense? Do you remember me talking about that before in the past, or hear me say that?
Yes, but I usually mark the first as it, you know, develops. And I guess I should just wait for the displacement before I mark one.
There's nothing wrong.
But
Like if you mark that right there, right? Ain't nothing wrong with marking that because that is the first one. But when you're looking at it as, okay, are we going to use this as a first presented fair value gap? This is where, right? This is where you're looking to use as the first presented fair value gap. And now I'll give a little bit of game for you and all of those that's watching, right? When you have imbalances like this, as we have, right? We got an efficiently delivered area on this way up, right? And we're starting to displace away, right? We have the first imbalance here, right? And then we got this imbalance here, right? You wouldn't be looking to use this one unless in this scenario we were bullish and we got above this and closed above it. If price chose to trade back up into this one and it was staying bearish, you're not trading off of this, you're trading off the order block, right? Because this is your first presentation, right? And if we're going for if it's a high resistance run and it comes back up, you're looking to trade off of the order block, not this one here, right? You're looking to trade off this one if price is bullish and we get back above it, right? So in this case here, it's your first presentation. If you're having to suffer through high resistance and it goes all the way back to the last up close candle of the order block, right? Then you're trading off of the order block, right?
Let him cook!
You understand what I'm saying? Makes sense?
yes, that clears it up.
All right. Anything else? Did price do anything to surprise anybody? Anything else? Did price do anything to surprise anybody? Right? And then another thing that could have helped you a little bit, right? Another thing that could help you a little bit is that if you were monitoring, if you see, I don't know if you can see the dotted lines in the background right there, that fib there, right? Those are octants. I mean, though, yeah, those are octants for a opening range gap from the first, which was yesterday, right? Those are octants from yesterday's opening range gap, right? So when we came in up to there, let me darken this up some so everybody can see it. Okay, as we came up here, as price came up, right, what we got going on YouTube? Okay, we got some more people over there. Remind me to go back and read what Gratitude said in YouTube, right? Y'all do me a favor on YouTube, hit like for the algorithm and subscribe to the channel if you ain't subscribed. I like what I'm seeing on YouTube, so I will share the giveaway sheet on YouTube. I will share the giveaway sheet on YouTube. I like what I'm seeing here. Hey, J-Rock, you ain't got no email in there, J-Rock. Don't get kicked off the sheet because you ain't put all the information in there. Y'all know if you have any blank spaces on the sheet, you get taken off. All right, the giveaway sheet.
I was filling it in.
You was filling it in? Oh, all right. The giveaway sheet is pinned to the top of the chat. And then Hit Learn Share gonna put something in the thing, talk some remember to read what Gratitude said. All right. So looking at price action, right? If you see here, right, you see I got this fib tool that just seems to be floating in the middle of nowhere for no apparent reason. If you come to regular trading hours, right? If we come to regular trading hours, now it makes more sense. It looks like it's connected to something, right? It looks like it's connected to something now, right? And if I spread this out, we can see that it's connected to the close on Tuesday and the open on Wednesday, right? So the 4:15 close on Tuesday, that's the New York regular trading time, to the 9:30 open on Thursday, the New York regular trading time, that's our opening range gap, right? And then when we come over here to today's price action, right? This is just showing the New York time only. This is not showing any of the regular trading hours, right? This ain't showing no regular trading hours. So we remember I tell you, we want to be like Ant-Man, right? We want to be like Ant-Man and be able to look back through price, right? So what I'm going to do, I'm going to circle this high right here, right? Remember that high. And then, no, you know what? I'm going to put a line there. Buy side liquidity. So we will know what it's for. Okay. Buy side liquidity. And I'll still circle it so we can see right now. I'll circle it. All right. So we came up. Shrink this up here. All right. So we open up at 9:30, right? Open up at 9:30 here. Rat up, came down, created relative equal lows, right? So we got all these relative equal lows there, right? We came up, right? So all of this right here, sell side liquidity. We're continuously engineering sell side liquidity. We're not taking any sell side, right? And then as you see, we come up into that buy side liquidity right there, right? We come into that buy side liquidity right there. But what do we fail to get to that a lot of people really wouldn't be watching? Talk to me, Kim. What do we fail to get to that a lot of people won't be watching? Talk to me.
0.25.
0.25 of what?
The quad.
0.25 is the lower quadrant. Lower quadrant of
Yeah,
what?
The range that you the
She fighting. She fighting. She fighting.
the PD array.
What of the what? What is this right here? What do we say that was?
Oh, opening range gap.
Yes, there you go. It took this liquidity, but it failed to get to the lower quadrant of this premium PD array, right? That premium PD array, what is its job? Its job is to do what? Act as what?
Resistance.
Act as resistance and send us where? All of your
Down.
yeah, but all of your premium PD arrays, they're going to send you down, but they're sending, their job is to send you where?
To the low, the liquidity.
Yes, to the liquidity. There you go, right? So we're failing to get to that lower quadrant. That shows a sign of weakness and strength, right? It shows a sign of weakness because we took the liquidity and we failed to get to that lower quadrant, right? Then we come here. Then once we see that, we see we've swept liquidity. We failed to get to the lower quadrant. That dot right there is going to drive me crazy. Got to get rid of it. Get out of there, right? So we failed to get to that lower quadrant showing weakness, and then we start to displace down. All right, we start to displace down, right? We come back up here, stop at the fair value gap. Don't touch the breakaway gap, right? We drop down, right? Get a bearish breaking market structure right there, right? So now at this time, right, we have created now, mind you, albeit, right? You said you had this as your first presentation, right? Now we got the understanding, right? The first presentation is going to be the one based off of displacement, right? So now that we've broken structure, right, and came down, we got a break in market structure now, right? We do not want to see price, right, coming, of course, back above there, right? And we don't want to see it digging deep into this balanced price range, right? So if you don't want to see it digging deep into this balanced price range, okay, you don't want to see it coming all the way back up here. Okay, so just a few more other signatures you can watch for to say, okay, maybe this is asking too much, right?Maybe this is asking too much because the way we are trading right now off of this higher time frame PD array, we're not in high prices moving. It's moving. We're not in like range bound activity, right? Price is moving. We came here, right? We went range bound here. We displaced up, right? Dilly-dally there, displaced up, and then we came down nicely, right? It was a down, up, down, right? We're not range bound. We're moving. Price is moving. Price is flowing, right? It's moving like in a low resistance type run. So in low resistance, we're not anticipating it coming all the way back to the highest point of the order block, right? We're just looking for it to come back to that first presentation, right? Looking for it to come right back to that first presentation. So anytime that you're, like you say, you mark it out when it first create. Oh, this is the first one, right? Don't just look at it as being the first one. Look at it as being the one made off of displacement. And then pro tip number 2, right? Pro tip number 2, remember what I said, right? When Michael, he used to teach a lot more on buy side imbalances, right? Back in the day, he used to teach about buy side imbalances and sell side imbalances, right? That's before he gave us the fancy term of buy side imbalance, sell side inefficiency, and sell side imbalance, buy side inefficiency for BISI and SIBI, or bearish fair value gap and bullish fair value gaps, right? Now, when you look at the buy side imbalances, when you have stacked fair value gaps like this right here, right? Just one behind the other, right? Especially when we got 2 suspension blocks, right? It's a volume imbalance there, a volume imbalance there, a volume imbalance there, right? Realistically, you can just look at this as the imbalance like that, right? That's the entire inefficiency right there, right? From there to there. So if you mark it like this right here, right, you're not anticipating price to come back to this, right? And then if price is exceedingly bearish, what don't you want to see it touch or get a closure above?
CE.
Yep, CE.
Equilibrium.
Yeah, it's consequent encroachment. Same thing. All right, 50%, but it's consequent encroachment. Now, look where this first one rests, right there at consequent encroachment, the place where you don't want to see price get if it's extremely bearish in this point here. So just a couple different ways to, you know what I'm saying, help you see the overall picture and the overall narrative of what price should do. Because if price does this, take liquidity, fail to get to the octant of a premium PD array, and then displace away, then price should do this, come back to the first presentation or back to the imbalance, you know what I'm saying, that requires the attention, and then go. Because that right there, right, when we come up here, we're coming back. We created it, traded away from it, traded back to it. This right here, that's just a first touch. That's what I be talking about, first touch. For anybody who ain't never seen what I mean when I be talking about first touch, right? Right here, this is first touch. Let me make this wick so you can see it. Okay. This is first touch. All right. When we make a fair value gap, we make a fair value gap. When this candle closes, then this candle opens up and trades up into it. This is what I mean by first touch, right? The way Michael teaches using any PD array is you create it, first touch or not, trade away from it and do something to support the narrative, right? Meaning we were bullish, right? We hit a premium PD array. We're in a premium of the range. Now we got a bearish break-in market structure, right? So it has done something. We've engaged sell-side liquidity, bearish break-in market structure. So it traded away from the PD array, doing something that helped shift or enforce the narrative to bearishness. And now we're trading back to it to utilize it, right?
Let him cook!
Going crazy. That makes sense?
It does.
All right. Yeah. Now, I don't expect it to just, you be an expert at it just off of this one explanation, but, just a few things to kind of help, learn to see it in real time. Because when these candles are ticking, it's hard to see stuff in real time. When they tick, it's really hard to see it in real time. It takes practice on practice on practice on practice. That's why Michael teaches you learn it for a year. You tape read it for a year. You paper trade it for a year. And then you go live. That's how he has it laid out. That's how he teaches it. Right? That's how he taught it to us. That's how he gave it to us. For a whole year, right? All he did was share the content, right? Then the next year, he started tape reading, right? Then the year after that, he started paper trading, right? Then the year after that is when he started sharing live trades that he was doing with himself and with his son, right? He spread it out over 3 years, just like he designed it to be. He spread it out over 3 years, right? Gratitude. Again, if you're just pulling up, right, the link for the giveaway, the spreadsheet for the giveaway is pinned to the top of the chat. Fill out the spreadsheet if you want an opportunity to win a free Apex account, right? The codes that I will be giving away is good for one any size standard Apex account. All right. So it can be a 25K, 50K, 100K, 150K. It can be intraday trailing drawdown or end of day trailing drawdown, but it has to be standard. It cannot be the no activation fee. What does that mean? If you pass it within the 30 days that they allow you, they don't do subscription models no more. So if you don't pass it in 30 days, the account just goes away, right? But if you pass it within 30 days, you are responsible for paying the activation fee. So if you went to get a free standard 50K with intraday trailing drawdown and passed it within 30 days, you would be responsible for paying the $79 activation fee. If you chose end of day, you would be responsible for the $99 activation fee. And depending on what account size you got, the activation fees change accordingly, right? And while I read Gratitude's question, remember, we are now doing a
Freebie Friday. Freebie Friday.
on a Thursday.
Freebie Friday. Freebie Friday.
On a Thursday. We didn't touch the low of the week and left relative equal lows. So will that be a protected low? But we need to see what price does Sunday open. Are you, is that what price did to surprise you, or are you asking me for a crystal ball? Help me out. Is that what price did to surprise you, or are you asking me to pull out my crystal ball? How far back can I can't undo enough. Can't undo enough. Huh? Help me out. What's going on, core cravers? Shout out core cravers that pulled up in the building. Would you actually mark that out as one SIBI instead of two separate ones? Yes, me personally, I would. I would just mark it as one large buy side imbalance. I wouldn't mark, sell side imbalance. I wouldn't mark it as one SIBI. I'll mark it as one sell side imbalance because it's two SIBIs / suspension blocks just stacked on top of each other. So I would just mark it as one sell side imbalance. All right. That's what I would do. You never heard that before. Yeah, we talked about it back in the day. As a matter of fact, I just started talking about it again here recently, right? I just recently started talking about marking stacked fair value gaps as one imbalance. Yeah, I just recently started, adding it back in lately because that's something we hadn't talked about in a while. And if you go and look at the old ICT stuff, you'll see him talking about a buy side imbalance and a sell side imbalance, right? And typically it would be something like this right here, right? Because typically it would be something like this right here, because back in the day, right, he used to call this a liquidity void, because he said the people on baby pips, they used to call these liquidity voids, but this was just a sell side imbalance, right? So it would be something like that, where you got continuous down close candles or continuous up close candles like that, right? And a lot of times it will be like multiple fair value gaps inside there, right? And you're looking at that whole thing as one PD array. All right. But now I'm not looking at the entire bearish order block as one PD array. I just do it like this when we got stacked fair value gaps just right on top of each other, and especially on the lower time frames, right? On the lower time frames. So if sell side were in the next stop, hold on. So if sell side were, where is the next stop? Help me out, Deborah, or somebody. My reading ain't reading. I swear it ain't. So if sell side, where is the next stop? 29,260, them to 27,630. Core cravers, you type like I read. I don't know what in the world you just asked. Somebody translate that for me. I thought you used to mark them separately because I thought you said gap risk was allowing it to come back to the higher gap. Yeah, you can they're two separate PD arrays, but when they're stacked, right, where you have to allow for price to go to the deeper fair value gap, right? Right. If you're selling here, you have to allow for price to come here, especially when it's in line with the last candle of the bullish or bearish order block, right? So on high resistance, we anticipate it coming all the way back deep as it can into the order block. So you have to allow for price to come back to the deeper imbalance. you know what I'm saying, be no matter if that deeper imbalance is a BISI or I can't remember which one it is this one here, right? Or the SIBI, right? So if it's going up, right? If it's going up into the bearish order block here, right? Or if you flip it over and it's coming down, right? And then it will be the reverse. It will be a bullish fair value gap, right? Coming down. It just depends. You know, you got to let it go to the, you anticipate it going. Your risk has to allow for, I ain't going to say anticipate. Your risk has to allow for it going to the deeper fair value gap, no matter if it's marked as separate or one. But I was just saying it can help you, you know what I'm saying, look at what you anticipate price to do. Because me, I'm a visual learner. So if this imbalance is supposed to act as resistance and stop price, right? If I visually see it this size right here, right now, I'm anticipating selling soon as we touch it, right? Whereas if I'm anticipated, I'm saying, okay, I'm demanding that it come back to this one here. Right now, I'm waiting for price to get all the way up here. Okay, and that may be asking a little bit too much, especially right when we got this efficient area here, this efficient area here, and now, right at this point, we're starting to leave the area. Right, so now I'm asking it to dig all the way back up through all of this just to come all the way in there. When I just showed weakness at the opening range gap, at my premium, at my anticipatory reactionary point, I'm showing weakness there. I can't make it to that PD rate. And what does Michael teach about the premium PD rates? Your best shorts are gonna come where? Talk to me. Somebody talk to me. Your best shorts are gonna come where in relations to a old premium PD rate? The best shorts are gonna come where? And preferably where?
The discount of a premium.
Discount of a premium PD array, and preferably where? Below what?
0.25.
Below the 0.25. Y'all give it up for the double team tag team. Shout out J-Rock and shout out Steve. I think that was Steve. Was that Steve? Shout out J-Rock and Steve. If it wasn't Steve, I jollipies, but you sound like Steve. Okay, so that's what we're looking for. We're looking, if you were short off of your premium PD array, if you were short off your premium PD array, you don't want price coming back here because that's where your stop resides now. Right? That's where your stop resides now because we've displaced away. We've got a bearish break in market structure. You don't want to see that taken anymore. So when price is coming back up, right now, you got your PD arrays marked out appropriately to help you visually see where price should run into a brick wall. All right, should run into a brick wall. You never told me if I was supposed to be getting my crystal ball or not, or were you just saying that's what surprised you? I mean, if market maker model is sell side, where is the next liquidity stop? All right. Okay, I think I understand. You're saying if we are in a market maker sell model, where is the next liquidity? The next target of liquidity? Is that what you're asking, core cravers? All right. And what time frame are you looking at? Right now I'm on a 60-minute time frame right here. Right, I'm on a 60-minute time frame. What time frame are you looking at? Daily time frame. All right, so on a daily time frame, we are not in a market maker model on the daily time frame. On a daily time frame, we're consolidating. This is not a market maker model on the daily time frame. On the daily time frame, we are consolidating, right? If anything on the daily time frame, right? If anything, we can say this is an initial consolidation for a market maker model. And right now, we don't know if that would be bullish or bearish, because right now this is an initial consolidation. If we break out and came down here somewhere, right, then we could say that was the initial consolidation for a market maker buy model. Right? If we break out and go up here somewhere, we say that was the initial consolidation for a market maker sell model. But right now, we are not in a market maker model on the daily time frame. We are just consolidating. We've talked about that. How long we've been talking about consolidating on the daily and the weekly time frame? Somebody tell me, how long we've been talking about that? Who remember? How long we've been talking?
2 weeks almost.
Yeah, yep. Let's see. All right, let's come out here and we're going to get our projections from the weekly. Boop. Right there. So we were price was moving up. All right, price was moving up here. We came into Picasso's house this week here. So then we came down there, right? And at this point, we said we're watching to see if this is a smart money reversal, right? And since then, it's been 1, 2, 3, and now this makes 4 weeks. We've been talking about we just consolidating because we made it to Picasso's house. Because remember, when we hit this, we said, what do we do once we get to Picasso's house? And what do? We do what?
Sit on our hands and let the market tell us what they want to do.
Exactly. We sit on our hands because we've made it to the destination. And when we typically make it to Picasso's house, price will start to engineer liquidity. So for at least 4 weeks, we've been saying that we're just engineering liquidity on the weekly and the daily time frame. And yes, a month of Sundays. Y'all give it up for Father Legend, because you know we have been talking about it for a month of Sundays. Okay, so not in the market maker model on the daily time frame, right? So right now on the daily time frame, you don't have a draw on liquidity for the daily time frame. There's no draw on liquidity for the daily time frame because we're just engineering liquidity. Right now, if you're using the daily time frame to trade, right now you're just playing the range, right? What range is that, Tim? Well, I'm glad you asked that question, little Timmy Rogers. And before we answer that question, we're getting ready to do the first giveaway for
Freebie Friday. Freebie Friday.
but on a Thursday.
Freebie Friday. Freebie Friday.
But on a Thursday. Yes. Let me go over here and lock the sheet. Oh, ain't nobody on here today. Ain't nobody filled out the sheet today. Let me go in here and lock the sheet. Sheet is locked. All right. The sheet is locked. Let's see here. 1, 2, 3, 4. The sheet is locked. That's it. I guess y'all don't want a chance to win a free account. 1, 2, 3, 4, 5. Let me hide these email addresses. Oh, you know what I didn't do? For the hang up on Instagram. Y'all come to YouTube if y'all want to participate. I'm sorry, y'all. I forgot to put the codes on my Oh, my son posted something. All right, y'all, hold on. Y'all, a proud papa moment just interrupted Freebie Friday. All right, proud papa moment just interrupted Freebie Friday. If you don't like it, don't like it. If you don't like it, oh, I can't even go to Instagram on this computer. Let me see. Cause Instagram be trying to make you be signed in. Let me see. Cause I don't know how to sign in on the computer. Il Jodem. Il Jodem 23 Instagram. There you go. Here it is. I hope it let me play it. Am I sharing my sound? I hope it let me play it. My son just posted something. God dog it. Come on, man. Let me see. Oh my God. Go to Instagram app. Go to Instagram app and what? Said go to the Instagram app. Hold on. Go to your authentication app. I don't have an authentication. Google Authenticator? What's Google Authenticator? I don't have a.
Do you have an iPhone?
Yeah, I got an iPhone.
So normally I just go to my passwords. And when you get there,
Oh, that ain't
you
even
just see a
mine.
section that says codes,
That ain't even my You said go to what?
passwords,
On the phone? Passwords? All right,
and there
passwords.
should be a section that says codes. And there may be a code there.
Okay, passcodes. Instagram. Okay. All right, I see a code there. You all over it. That worked. That worked. You are all over it. All right. Now I can get my proud papa moment. Oh, he was posting all kind of stuff. This is New York. That's New York. That's here. So how? No, that's not New York. That's old. That's not New York. Now that's other stuff. That's old stuff. But anyway, he posted this. I don't know what it is, but y'all fun to share it with me. Come on, let's go. I can't hear nothing.
Don't sleep, wake up. I said, don't sleep, wake up. Don't sleep, wake up. Can't go, my bitch study. Make up, I can't think of bang up. Yeah, I feel my break going down. No, I'm dead wrong. Lately, I've been moving down. Looking at the past, asking, what have you become? I feel like I've been stuck, I need to tell you something. Nah, I can't even tell you. I feel like I'm a failure. I'm so bushy, like I can't
got beat.
you. Turn around, tell her try.
Are you from New York even?
In New York, I'm Millie Rock. Hiding in my socks. Running from a up. And I shoot that up. And I'm on the block.
So, I try to get in the past. She got a man soon. I know where she stand. We gotta stay in tune.
Girls for the girls.
I won't last soon. I got knots up on my mind, like the bang too. Don't get cool to us, you get banged too. I'm jumping out of the car, I'm jumping out of the coupe. Niggas be walking around, know that they can't shoot, they can't shoot. Niggas they hear the sound, they been out of the loop. Yeah.
A big apple in the big apple.
Man, I got me some bathing apes. I got me some bathing. I got me some bathing. I got me some bathing.
That was kind of nice. I got to give it to him. That was kind of nice, man. Y'all give it up for my son. Y'all give it up for my son. That was nice. Wait a minute. Oh no, I thought that was my truck. That's not my truck. That was kind of nice. Y'all give it up for my son, man. He got his new CD he putting out called Don't Sleep. Don't Sleep. Anybody that's into music that them young boys listen to that I can't understand, he got what it is. That's his. I'll just put it in the. I'll put it in the chat. Copy. I'll put it in the chat. Y'all go. That's too many. It wouldn't let me paste that many. It said it's too much. I can't put it in the chat. Y'all just go check it out. I'll put his Instagram in the chat. I'll put his Instagram in the chat. Then y'all can go check out his music. Now, let's get back to the message at hand. If you have entered the giveaway, right? Drop a number in the chat between 1 and 10. Drop a number in the chat right now between 1 and 10. Just put it in there one time. Just put it in there one time. If the number generator does not pick someone's number exactly, then the person that's closest to the number without going over will win. All right. So I see DXM put 9. Core Cravers put 5. Kim is on over here. Zoom, where's Zoom? Kim put 7. That's the first one I see. Yolanda, you put 7, then you put 4. So Kim, the first one I saw was 7, so you getting 4, Yolanda. 4. All right. Rhonda put, I said 1 and 10, Rhonda. I said 1 and, somebody got 9. You got to pick another number. Gratitude. Pick a new number, Gratitude. Oh, Gratitude got 2. Gratitude got 2. Never mind. You right. You good, Gratitude. Gratitude got 2. Giant Cake. You ain't even on here. Giant. You ain't even get it. You gonna have to be in for the next one. Wait a minute. Who I need? I need Rhonda. Rhonda said somebody got 5, Rhonda. Somebody got 5. So Rhonda and J-Rock. J-Rock got 8. 1 for Rhonda. All right. So that's everybody inside this what's the name? Right? So y'all ready? I'm not using the generator. Why? Because I already picked the number. The number is 7. Give it up for Kim. Kim won the first giveaway. Don't leave. You better stick around. We're going to do another giveaway. You better stick around. Who messaging me on WhatsApp? Oh, we noticed an unusual. That's me. If this wasn't you, recover your account immediately. That's me, Instagram. All right. No, I'm about to unlock it now. I'm about to unlock it now. All right, I'm about to unlock. It was just locked because I was getting ready to do the first giveaway. I'm about to unlock it now. Let me send Kim her stuff. Oh, I didn't put it on the what's the name? All right. I'm all over the place, y'all. I'm sorry. I forgot to put my codes on the computer. I forgot to put my codes on the computer. Come on, thing. Got people waiting around. They're getting tired. They're going to leave in a minute. God dog it. Sorry, y'all. I should have had this already on my computer and ready to go. This is why I like to use my MacBook, because I can just airdrop stuff. I can just airdrop stuff to my computer from my phone. Jesus Christ. What is this thing doing? Oh my freaking God. Why won't it let me? Oh, edit ain't on. Oh, Jesus Christ. I didn't know I had to turn edit on. I didn't know I had to turn edit on this thing. When did they start doing that? When did they start doing that? Okay. All right. Now I got them on my computer. Let me go here. Am I still sharing my screen? Yes, I am. So, all right. Now that I got everything in order, the next round of giveaways will go much smoother. Now that I got everything in order. All right. And that was Kim. Correct. Let me see. That was Kim, right? Uh-oh. Yeah, 7 Kim. All right. So Kim, we'll come over here and copy your email address. All right. Let's go here. Go to my Gmail because I don't want to send it from my personal account. Don't want to do that. I don't want to do that. Compose. Kim. Here is your coupon, your Apex coupon code. Paste. Right there. And Kim, where are you there? Copy. Paste. All righty. And send. All right, Kim. Your code has been sent out to you. Y'all give it up for Kim again. Y'all drop some fire in the chat for Kim. Drop some fire in the chat for Kim. And let me go unlock the sheet. I'm going to unlock the sheet. Now, the sheet has been unlocked. Done. The sheet is pinned to the top of the chat. Hey, y'all drop some fire in the chat for Kim now. Y'all stop hating. The sheet is in the chat. If you are interested in your opportunity to win an Apex account, again, for those who are just tuning in or tuned in late, today is Thursday, but we are doing
Freebie Friday. Freebie Friday. Freebie Friday. Freebie Friday.
but on a Thursday. All right. What was we talking? Oh, we was answering questions about price. Anybody got anything else about price that they wanted to ask about price? We was answering questions about price. Core Cravers, did that answer your question about I was saying something, and I said before we do that, we gonna get over there. Junior JREMR. What do you do? What you mean, what do you do? I want to know exactly. I want to know how exactly we know model changed. I want to know how I want to know how exactly we know model changed. What model? Because we're not in a market maker model on the daily time frame. We're just consolidating. So what? Help me out. Help me out, Core Cravers. Again, the link for the giveaway, the sheet is pinned to the top of the chat. Fill out the sheet. Make sure you put in each blank. If you leave anything blank, you will be removed from the sheet and not allowed to participate. So make sure you fill out each blank. Name, YouTube channel name, and email address. So we are in consolidation. How do we know it changed its status? When you get displacement. Okay? right here. Now, again, when you're using higher time frames, all of this is going to take longer to play out, right? The concepts play out rapidly on intraday time frames. But when we're looking at daily time frames like yourself, right? Let's go to a daily chart, right? When we're looking at daily, I got a lot going on. All right. All right. When we're looking at like this daily chart here, okay? Right now, we're consolidating. This is the highest point. This is the lowest point of this consolidation. All right. Don't extend. Okay. This is the highest point to the lowest point of this consolidation. All right. Now, this is next week's calendar. This week is over. Right. This is the end. This is Friday. This week is over. Right. This is Thursday. This is the last trading day. If you hover here, you notice it says Monday, the 6th. If we go to a weekly chart, you notice there's a new weekly candle that's starting already. So this week is over. All right. Now, when you yes, ranging. Yes. Y'all give it up for ICT Breaker for giving us a synonym for consolidating. Shout out ICT Breaker. So looking at the daily chart, right? We're just right here consolidating, okay? And we have been in this range here for 38 days, right? You see that right? That says 38 bars, 38 trading days, right? 59 days. That's 2 months. That's 60 pretty much. If you get 2 30-day months, that's 2 months, right? 69 calendar days, 38 trading days. That's why I was saying it takes a long time for the concepts to play out on the higher time frames. Now, looking at this, it's the price action really spotty. So let's go over here to the continuous contract, right? That's copy this, paste this, right? All right, here we go. So now, looking at this here, you see how here we have price is consolidating down here. All right. You know that something is happening when you start to see the displacement. Now, it ain't just as simple as, oh, it's displacing, okay? So right here, in this area here, we were consolidating for /range trading for 102 trading days, 151 calendar days, right? We were in this range, all right? Then we started to see displacement to the downside, right? Tim, what is displacement? Displacement is expansion coupled with imbalances, right? Displacement is expansions coupled with imbalances. That's displacement. It's displacing away from this consolidation, right? Now, the reason, because you say, when do we know it's changed, right? So it all depends on the narrative or the order flow or the bias, however you want to look at it, right? It all depends on order flow. So when we went into this consolidation, right? When we went into this consolidation, what kind of program was price in? A buy program or a sell program? When we went into that consolidation, right? Going into this consolidation, was price in a buy program or a sell program?
Buy.
Buy program. Right? So, since price was in a buy program going into here, right? When we saw displacement to the downside, right? We are looking at this right here as what? This is our what?
Judas.
We want it to turn into a Judas swing. Yes, yes. But we are looking at this as being what? Judas is what? Judas is a type of what? Say again?
Manipulation.
Manipulation. I give you half credit on that, Kim, because we want to see this turn into a bullish Judas swing. But this move down here, we're looking at that as manipulation. And if we're looking at as that manipulation, we want to see it engage with what?
Sell side liquidity.
Sell side liquidity. And then once it engages with sell side liquidity, if the sell side liquidity is not just a swing low or it's not Picasso's house, we want to see it engage what? We want to see it manipulate the liquidity, but we want to see it do what? Hit what? We want to see it hit and I'm gonna give you a clue by saying hit and
Anticipatory reactionary.
you got to say it. You got to say it. You got to say it. Somebody say it for J-Rock. J-Rock struggle with it. So somebody help J-Rock out. We looking for it to hit a what? Deborah, help him out, Deborah. Oh, Deborah at work. She got an RN clothes on today.
Anticipatory reactionary point.
You got to say it right. You got to say it right. You got to get
Anticipatory reactionary point.
Yes, it's an anticipatory reactionary point. You feel me? So, right. So when you see the displacement, that's letting you know something is going on, right? The elephant is stepping in the pool. I need to start paying attention, right? That's what you're looking for when you consolidate and you're looking for that displacement. Now, if the displacement is attacking the opposing liquidity based off the order flow that we're in, you're looking for that to be the manipulation, and that's giving you an opportunity to get in early, right? And you just don't want to randomly get in. You want it to come to some type of higher time frame PDA rate, right? So as we see when we drop down here, right? What did we trade into? We traded into the first BIGSPIDER, right, that left this range, right? And this is, we talked about this back then. Shout out Kim. We was talking about the fair value gaps, right? When we said that first fair value gap is still inside of this consolidation, and this is your breakaway gap. This is your fair value gap. And back here when we was watching this was the monthly PDA rate that we was watching price to come to. We wanted to see price come to this monthly PDA rate back there, right? For those who don't remember, go way back in January, February, March time frame and look at the videos when we was talking about price making a retracement. We were bullish, but higher time frame was retracing. That was our discount PDA rate on the monthly, right? So now we're at an anticipatory reactionary point, right? And so looking at the daily time frame, when you came down into that monthly PDA rate, now whatever your trading model says as far as when you engage, if your trading model says engage as soon as I hit my ARP, aka anticipatory reactionary point, or does it say go down to my entry time frame and wait for a certain thing? Do I go and wait for a change in the state of delivery before I enter? Do I go in and wait for an inversion fair value gap before I enter? Do I go in and wait for a break in market structure before I enter? Whatever your your strategy says, that's what you do once you see the displacement in a manipulation way, or if it's giving you displacement coming toward the draw on liquidity. The first thing you want to do is look back to see if the manipulation has already happened. If the manipulation happened prior to this consolidation, then you're looking for it to displace, and then you're looking for a PD array for it to retrace back and give you an entry. Because in this sense right here, when it leaves the consolidation and attacks the opposing liquidity, we are getting the price engine model of offset accumulation, right? But if it leaves in the direction of the liquidity, when you get the retracement back down, you're getting the price engine model of reaccumulation, right? Where you consolidate, expand, come back to an area of fair value, and then continue up. All right. So it's not just as simple as how do we know when it's changing? It's a whole, it's a whole picture. It's a whole Mona Lisa that you want to, you don't want to just pick one little piece and say, oh, now I understand. It's a whole conglomeration of things that you got to consider, because it's all about order flow and price delivery.
Let him cook.
You feel me? Do that make sense? Do that make sense? Core cravers. What's up, juices and berries? We fine. We fine. All right. Juices and Core Craver said yes. I'm glad I was able to help. Anybody else got anything? Anybody else got anything they want to ask about price? Something that they're not clear on, something they need some help on. One more. Where does the retracement fair value comes at? Well, one more. Where does the retracement fair value gap comes at in daily? I don't know what in the world you're talking about. The fair value gap gonna happen wherever they put the fair value gap at. Wherever the fair value gap pops up at, that's where it's going to be. There's not one place that the fair value gap is going to be, right? If you're asking which fair value gap you need to pay attention to, it depends on the order flow at that time, right? It depends on Steve. Don't be, hey Steve, I saw your camera come on. You know how you do, Steve. Don't you be popping that camera on, looking crazy. Steve be Hey, who was on here with golly, what's his name? He had the beard, cheat chef. What's his name? Chef? I think it was like Chef or something. Like he turned his camera on accidentally. He was like, oh. I made a whole gif of him. We pulled up. That was on my old computer. I can't even play it now. I think his name was Chef. Did I put it in the old server? Let me see if I put it in the old server. Chef. I put something in my chef. That ain't Chief. Let me see. Camera. Oh, it can't. It don't. Or maybe it was in the I stay popped up. See how I stay popped up. Oh, when you search it, it show all of them. Do it show all of them when you search it? Anyway, I done got bored. I know I put it in the chat somewhere. I put it in the chat somewhere. I'm gonna find it one day. All right. What's going on? Who else got something? Let me check the sheet. Did anybody else get on the sheet? All right. Okay. I see a couple more people got on the sheet. All right, a couple more people jumped on the sheet. As everybody who's interested in a chance to win a free Apex account filled in the sheet. Has everybody filled? What was his name? What's that, Chief? For some reason, Chief is sticking in my mind. That's driving me crazy. What's his name, Chief? You remember what I'm talking about? Deborah. Was it Chief or Chef?
I remember, but I don't think it was Chief. I'm not sure.
Golly, what was his name? What was his name? I remember like getting a little clip. Oh, how do you look for like media? Just look for media inside. Can I just search for like media inside here? More filters. Is it a way just to search for like media inside of a Discord? Include search in video. Video. All right, video. It wasn't there. Okay. See, images, link, file. Embedded, that's when I was leaving. Oh no, it's all kind of stuff. Embedded got a million things. Embedded got like a million things under embedded. Or like a million things on embedded. It wasn't embedded. Discount depends on. Oh, they asked something else? All right, let me stop looking for Chief. Whatever his name was. Let me start looking for Chief. Let me see. I seen J-Rock answering a question. What you were saying, Chief? She said, they said, for the price to give us discount, we give importance to the first fair value gap, right? You kind of mixing stuff up there, Core Cravers. You're mixing stuff. You're mixing up. You're mixing stuff up, right? And based off like how you like based off the questions you asking right now, right? I would say, you know what I'm saying, just trade anything besides the ICT concepts right now, because the way you asking the questions, you kind of mixing stuff up, and so you're gonna end up doing more detriment than good by trying to trade the concepts, because right now you're just guessing and shooting in the dark, right? Because based off the stuff you've been asking, it's like you're not ready to be trying to trade these concepts right now, because you said you're asking for price to give us a discount. We give importance to the first fair value gap. You're asking two different things, right? You're asking when price give us a discount, right? That's one thing, right? If price give you a discount, that don't do you a hill of beans if you're bearish, right? If you're bearish, you want price to move to a premium, right? So first of all, you got to understand, oh, I'm bullish. Now I'm anticipating price to come to a discount, right? Then once price gets to a discount, right, you want to see, has it manipulated sell side liquidity, or has it yet to manipulate sell side liquidity? You need to understand that, right? So it's moved to a discount. If you're bullish, it has manipulated sell side if you're bullish, right? And now, right, if you haven't entered based off of the retracement back to a higher time frame PD array, or this time frame PD array, if you have it on that retracement down here. I'm a visual learner, right? So want to go and do it visually for you, right? We're just going to use this daily chart right here because price is fractal. All right. So we see here. All right. We see here, go to CE. All right. We'll pull this down to here, down to our order block right here. All right. We're going to go to our order block right there. I want to pick, I'm not just going to pick a random spot. So I want to go to this order block here. All right. This is our latest expansion right there. Right. We came up, right. Kind of fiddle-faddled around there. Then we placed this order block, displaced up, and then went into this right here. So that's why I'm picking this as the dealing range, because this is our latest expansion move up right here, right? From there, outside of that, right there, okay? So now, and before we do that, I'm going to lock the chart, I'm going to lock the sheet, and we are going to do our second giveaway for
Freebie Friday. Freebie Friday.
but on a Thursday.
Freebie Friday. Freebie Friday.
But on a Thursday. Yes. Y'all remind me where I was at when I come back, right? Remind me where I was at when I come back. If you put your name on the sheet for the giveaway, if you put your name on the sheet for the giveaway, pick a number between 1 and 15. Pick a number between 1 and 15. Pick a number between 1 and 15 and put it in the chat. 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 All right, put it in the chat. Put it in the chat. It don't matter if you won the first time. You can still put your number in the chat. Yolanda, the first name I clicked on. What did Yolanda put in the chat? 4. Yolanda put a 4. Rhonda put 15. J-Rock put 13. Jesus and his 12 disciples made 13. That's why I love that number. Kim, J-Rock, get out of the way. Kim put 11. Core Cravers put 5. I'm sorry, people. If somebody got your number, you got to pick a new number. DXM put 12. Gratitude. Just don't give me no attitude. Gratitude, where you at? Oh, Gratitude 14. Nobody got 14. Gratitude put 14. Juices and Berries put 9. Juices and Berries put 9. Junior Emergency put 8. Nobody put 8 yet. Junior Emergency. ICT Breaker put 7. Nobody put 7 yet. And Wayman, where you at? Wayman, where you at? Wayman going once. Wayman going twice. I don't see Wayman. Wayman, you got to be here to participate. All right. Somebody give me a drum roll. Somebody give me a drum roll. Between 1 and 15. If it doesn't land, if the random generator don't pick your number, the person closest to the number without going over is the winner. Somebody give me a drum roll.
Boom, bam, bam.
2. Give it up for Yolanda. Give it up for Yolanda. She's the closest without going over. The number is 2. Give it up for Yolanda. Put some fire in the chat for Yolanda. All right, let me send the email and we're going to get back to answering the question. And while I'm sending the email, y'all check out my son clip it with Il Jodam in New York. He put this together based off footage he was collecting in New York and came back, and it's like a promo for his new tape called Don't Sleep.
Don't sleep. Don't sleep.
Don't sleep, wake up. I said don't sleep, wake up. Don't sleep, wake up. Cake up, my bitch dundee. Make up, I can't ever fake up. Yeah, I feel my break going down. No, I'm dead wrong. Lately, I've been moving down. Looking at the past, I said, what have you become? I feel like I've been stuck, I need to tell you something. Nah, I can't even tell you. I feel like I'm a failure. I'm so bushy, like I can't
got beat.
you. Turn around, tell her try.
Are you from New York even?
In New York, I merely rock. Hiding in my socks. Running from a up. And I shoot at up. And I'm on the block. Soon. I'm trying to get in the past. She got a man soon. By the way she stand, we gotta stay in tune.
Girls for the girls.
I won't last soon. I got knots up on my mind, like the bang too. Don't get cool to us, you get banged too. I'm jumping out of the car, I'm jumping out of the coupe. Niggas be walking around, know that they can't shoot, they can't shoot. Niggas they hear the sound, they been out of the loop. Yeah.
A big apple in the big apple.
Man, I got me some bathing apes. I got me some bathing. I got me some bathing. I got me some bathing.
Don't sleep. Don't sleep. Wake up.
Don't sleep, wake up. I said don't sleep, wake up. Don't sleep, wake up. Cake up, my bitch dundee. Make up, I can't ever fake up. Yeah, I feel my break going down. No, I'm dead wrong. Lately, I've been moving down. Looking at the past, I said, what have you become? I feel like I've been stuck, I need to tell you something. Nah, I can't even tell you. I feel like I'm a failure. I'm so bushy, like I can't
got beat.
you.
All right. Yolanda and Kim, when y'all get a chance, just drop in the chat that you all received your codes. Look at that. Wayman came up late. And he guess what his number was? 3. Yolanda, won't he do it? Won't he do it, Yolanda? Wayman
All the time.
Wayman came up and his number was 3. She said that bass in my
It's
ear
about
is
time.
fire.
It's about time and price, right?
Time and price. That's it. It's about time and price. Okay, what was I saying about this right here? Oh yeah. Right. So looking at core cravers, you still here? Because I don't want to go through this if you ain't still here. Are you still here, core cravers? Core cravers? Yes, no. All right. Everybody wondering, right? We got one last giveaway we're going to do today. We're doing one more giveaway. So I'm going to unlock the sheet. If you have not put your name on the sheet, I'm going to unlock the sheet. The sheet is unlocked now. If you have not put your name on the sheet, do so now. Right? Make sure you fill in each column, name, YouTube channel name, and email address. Right? If you're missing any blocks, you will be removed from the sheet. And you have to be present to win. We are giving away any size. And for those who don't know, we're giving away any size Apex Trader funding standard accounts. It can be any size, 25K, 50K, 100K, 150K. It could be intraday trailing drawdown. It could be ending day trailing drawdown, but it has to be a standard account. It cannot be the no activation fee. What that means is if you pass the eval within 30 days, you have 30 days to pass it. They don't do subscription models anymore. You don't pass it in 30 days, the account goes away. If you pass it in 30 days, you will be responsible for paying the activation fee. The activation fee depends on the size and trailing drawdown type, right? For intraday trailing drawdown on a 50K, it's $79. For end of day trailing drawdown on a 50K, it's $99, right? The 50s are what I gravitate toward now. I used to gravitate toward the 25Ks. Now I gravitate toward the 50Ks. If you like the 100 or the 150s or the 25s, it don't matter. It's a code that will get you any size account, standard account. Okay, that's what we're giving away. Right? You say they got the new 250Ks? Well, it ain't on here. They ain't got it on the They ain't got it on the site, right? So if they got a new 250K, it ain't on the site yet, right? And they ain't sent me no email or nothing about it. So wake up, don't sleep, wake up, don't sleep, wake up. All right, back to the chart. We are consolidating, right? And you asked when we move to, I'm here. I moved to my phone and I can't post in the docs from here because it was locked. It's unlocked now. It's unlocked now. So you can, what you mean you can't post from the doc? You had already posted in. You was already in. You didn't have to put it in the sheet. You just had to put the number in the chat. But you already own the sheet. So, you said, let me go back and find it. You said move to a discount, and then you said first PD array. Okay. Now, when it comes to, I'm going to remove some of this stuff right here. All right, I'm going to remove this right here. I'm going to take all that off. All right. So, looking at price, remember I said I'm highlight because, right, we came here, right, we pushed up, created an order block, right? And then we pushed up, we started consolidating here, we pushed up, and then we came back to a discount, right? So here, price is coming back to a discount. That mean a hill of beans if you don't have something in place that you're watching for, all right? Now, it comes back to a discount, okay? Now that it came back to a discount, in this case, right, we have sell side liquidity that has been taken on this drop back down to a discount, right? We took sell side liquidity. All right. All right. So we took out sell side liquidity on this drop down to a discount, right? And then if we look here, we have back-to-back BISIs, right? So we have one BISI here, right? We got one BISI there. Green there. We got one BISI there. And we have one BISI here, right? So, like I said, in this case here, right, you can look at this as one large buy-side imbalance, or you can just look at it as two separate BISIs, right? You can look at it as two separate BISIs, right? If you look at it as one full buy-side imbalance, right? We come here and we're going to grade it because we like to grade our PD arrays. All right. And if we grade our PD arrays, right, if you look at the one buy-side imbalance, right, we come down just below consequent encroachment, right? If we look at it as two separate PD arrays, right, we come down and get an institutional order flow entry drill inside the lower buy side imbalance, sell side inefficiency, right? And we wick all the way down close to the low of the top buy side imbalance, sell side inefficiency. And then we rally up closing with extreme discount sensitivity off of that area, right? Now, Tim, why am I saying that? Because coming back to a discount, right? When you come back to a discount, you're looking for certain things. When I came back to a discount, did I manipulate sell side because I'm bullish? When I came back to a discount, did I come into a anticipatory reactionary point, meaning a discount PD array, right? And in this instance, the answer is yes to both of those questions, right? So now that the answer is yes to both of them questions, if your strategy says enter, as soon as this daily time frame touches a discount PD array that I'm anticipating price to go up off of, then you would be buying based off of whatever PD array your model says that you trade off of. So now, if your entry model requires it to touch a fair value gap, then in this case, you would be buying based off of the fit. Now, if you want to buy off of this, and okay, this is the first fair value gap that's created in this move, I'm requiring price to come to this fair value gap. Bear in mind, since you have stacked fair value gaps, you're lowering the likelihood of price to dig very far down into this move here. Because when you trade off of the first imbalance that it comes to, your risk has to allow for price to come to this fair value gap, but you prefer that it does not. You prefer that it does not. Okay? So in this case, it does come to the volume imbalance. Now, if you are demanding more of a dig into this, you may not have got picked up, right? Because it did come in and it stopped inside the volume imbalance, inside this lower fair value gap. Okay, but again, right, you're demanding a lot when you got those stacked PD arrays, right? You're demanding price to really dig down into this area here. And if it's a low resistance liquidity run, you don't want to see it going too deep. All right, now, if your entry is okay, I'm not entering as soon as it touches, but when it touches, I'm dropping down and looking for XYZ. Then once it touches, then you drop down and look for XYZ. Okay, so it's not as simple as, oh, when it moves to a discount, I'm looking for the first fair value gap. No, it's not that simple. It's based off of order flow, right? And based off this order flow here that we're looking at here, right? This is your sweep of liquidity as we come there, right? And you have two imbalances, right? One very large buy side imbalance, two BIGSPIDERs stacked on top of each other, right? And you can see the sensitivity at the consequent encroachment of the entire buy side imbalance right there, right? Came down, extreme sensitivity at the consequent encroachment and moved back up. Then the second time when we came back down, it stopped at the upper quadrant of that buy side imbalance, right? Before even reaching consequent encroachment of the top BIGSPIDER, right? But we stopped right there at the upper quadrant of the entire buy side imbalance before price started to go back up. We had one more dip down on this day, one more quick manipulation, but notice, right, we did not take out that low, right? Had one more quick manipulation down. We didn't take out that low, didn't hit consequent encroachment, didn't make it to the bottom BIGSPIDER, right? And then we took off, right, all the way up, and then came up here and engineered buy side liquidity and stayed inside the range. All right, we never broke outside of our consolidation range, right? That's the high, that's the low, right? Never broke outside of it. And right now, if you're looking at what's going on in price, right now, this is your range that you're watching, the highest high and the lowest low of this consolidation area right there, right? We come there, put it on the lowest low and the highest high. That's what we're watching. That's your range that you're watching right there, right? That's your highest high. That's your lowest low of the consolidation area. And as long as we're in this area, right, you're playing like the impulse legs away and towards that 29,000. We talked about this last night and many other nights, but we went into great detail about it last night. Me and the gang, right? We was talking about this in great detail last night, right? You're looking at participating in this range by you're buying the bottom of the range, right? And following its impulse legs up toward that 29,807 and a quarter, right? And what's that number coming from? That's the equilibrium of this consolidation, right? That's equilibrium of this consolidation, right? And you're selling the high, right? Meaning you're coming to your last line of defense, aka the last up close counter of the order block, and you're coming to your last line of defense, aka the last down close counter of your order block, right? This is your bullish order block, this is your bearish order block, right? So if we mark those out, right, your bullish order block there, right? If you go wick to wick or body to body, that's body to body. I like to use body to body, right? But wick to wick, right? That's the same thing, right? I like to mark body to body. So I go there. You want to see sensitivity in the wick. That's where you want to see the sensitivity, right? But I'll just mark the entire thing since that's what we most people should go like that to give you just overall of what price is doing. All right. Okay. So when you're consolidating, consolidation is what type of condition? Consolidation is what type of a condition? Is it a high resistance or low resistance condition? Huh? Talk to me.
High.
High resistance during, what in the world is that? Oh, during high resistance, what do we anticipate price to trade back to? We anticipate to go all the way where?
To the order block.
All the way to the order block, right? So while we're consolidating, and you hear people say buy the bottom of the range, sell the top of the range, right? When you get to your last line of defense, which is your bullish or bearish order block at the top of the range, you're selling the bearish order block, right? What are you shooting for? You're shooting to come back to equilibrium, 29,807, right? You can shoot for equilibrium. You can shoot for PD arrays that rest at equilibrium, right? What do you mean, Tim? There's a suspension block resting right here. You can sell this order block and trade it back to that suspension block. There's nothing wrong with targeting PD arrays as your exit. Why? Why do you say that, Tim? Because if I come here, this suspension block, if price, right? If price is right here, right? That suspension block down there, what type of PD array is that to where price is where I got that circle, right?
Bullish.
This is
Discount.
yeah, discount. There you go. This is a discount PD array if price is up here, right? So if you sell this order block and price comes back to a discount PD array, this discount PD array is an anticipatory reactionary point. This bullish suspension block's job is to send us back up. So there's nothing wrong with selling this order block and targeting this suspension block. There's nothing wrong with that, using that as a target. Why? Because that suspension block is a discount PD array, just like this swing low is a discount PD array, right? You're not selling that. If you sell here, you're not buying that back over here because it's the bottom. No, you're buying it back because it's a discount PD array. You see what I'm saying? And then you're getting out of your position. So you're just getting out of your position at a discount PD rate, right? But you know that you're consolidating. So you sell the order block, the last up close handle of the order block, and target at least equilibrium or any PD array that's resting around equilibrium. You pick, right? Same thing when you're down here. You buy the bullish order block, right? And you're targeting, right, equilibrium. Right, so you're or you can sell something here targeting the bottom of the range. Sell here, target the bottom of the range. Right, sell at this SIBI, target that bullish order block. Right, you're just playing the ranges. You're up here, you're anticipating it to go back to the order block. Right, and what have we been doing? Right, the whole time. If we this is. Yeah, that's everything, right? This is all the price, right? So what have we been doing, right? We set our range, right? That's the highest high. That's the lowest low, right? After we pushed up, right? Took a high, pushed down, made a low, right? This is our current dealing range right there, right? What do? We came back up to the last line of defense. We talked about that, right? When we were looking to see if this was our smart money reversal, what did we say? This is the last line of defense on the daily time frame for that to be the smart money reversal. If we pop above it, we start over. That's not the smart money reversal. Once we start getting a pull back over here, we're watching this to be the smart money reversal. But it hit our last line of defense, and then what did it do? It came back down. Right, came very close to equilibrium inside this BIGSPIDER, went back up again, right? Didn't take out the high, right? Showing a healthy respect for that order block right there. Showing a healthy respect for that order block. And then right? And then we came back down to our order block on the opposite end of the range, right? Stop, went back up again, stop just before we get to the order block on the top end of our range. Came back down again, came right back down to the order block on the bottom of our range, right? And that was today's candle there. And now here's next week's candle already starting right there. But all we've been doing is ping-ponging in between the top of the range and the bottom of the range, right? So that's just a little gem for you when you hear people say sell the top and buy the bottom. If you're in a defined range, right, you sell your bearish order blocks and you buy your bullish order blocks, right? But Tim, what if it keep going? Okay, it's time. It's ready to leave that area, and you get stopped out. That's it, right? If it come down here and you buy the bullish order block and it keep going through, okay, it's ready to leave that area, and you got stopped out. Hoo-hum. There's going to be losses in trading, right? If it come up here and you sell the order block and it keep going through, ho hum, you got stopped out, right? At least you got stopped out with minimal risk. You didn't sell this SIBI right here and then it kept going and stopped you out up there. At least you only sold the order block and it stopped you out there. Minimal risk. All right. So did that help you at all, core cravers? All right. We talked about this part. Let's see. This part I don't understand. The fair value gap that aligns with the higher time frame liquidity and dealing range. Yeah, you need to go back and study some more, cause the stuff you asking, yeah, you don't really understand the concepts, right? You don't really understand the concepts. It's not about just one simple thing, right? It's not about just one simple thing of where is the fair value gap lined up at. It's a whole picture that you paint. All right. Price is seeking a liquidity objective. The fair value gap that aligns with that objective is the one most likely to produce the reversal. No, that ain't what I said. No, that ain't what I said. No, you see, you totally made something up right there, core cravers. You just made something up. That's not what I said. All right. Price is always seeking liquidity and balance, right? So it's looking to offer fair value to imbalances in price, inefficiencies in price. It's seeking liquidity to take liquidity because it needs liquidity to keep moving, right? So when it manipulates the liquidity, right? If it's trading into an imbalance, right? If it's trading into an imbalance that's near that liquidity and that imbalance is in the discount, right? Yes, there's a probability that it could reverse there, but it can take liquidity and trade into a breaker. It can take liquidity and trade into an order block. It can take liquidity and don't trade into a PD array. It just take liquidity and reverse. It's not about the fair value gap is lining up with the liquidity. It's about order flow. Are we in a discount for bullish order flow? Are we in a premium for bearish order flow? Have we manipulated sell side for bullish order flow? Have we manipulated buy side for bearish order flow? And once that's intact, right? Once we do the manipulation, right now, where are the bodies closing? Is the bodies closing respecting wicks? Consequent encroachment. Meaning above if you're bullish and below if you're bearish. Where is it closing in respect to the order blocks? Above mean threshold if you're bullish, below mean threshold if you're bearish. Where is it closing? It's telling you the story. The wicks are doing damage, but the bodies are telling you the story. Now that we see, okay, it's respecting bullish order flow, closing above mean threshold, above consequent encroachment, you know what I'm saying, above whatever PD array you're watching, the 50% of whatever PD array you're watching. Now, are we starting to displace back towards the liquidity or the destination? Yes, we're starting to displace back up. If we're displacing back up, right? How are we doing it? Are we doing it in a high resistance where we're pulling all the way back to the order block, or are we displacing in a manner where we're creating imbalances and trading into them partially and then continuing on, aka giving me institutional order flow entry drills? If we're doing institutional order flow entry drills, prices moving in a low resistance type manner. If we're trading all the way back down to the order blocks every single time, price is doing it in a high resistance type manner. Right? No, it's not about taking the minimum loss if it's lined up with the liquidity. It's about taking the minimum loss if you're getting it in an extreme discount or an extreme premium. That's where the minimum loss comes from, right? The minimum loss comes if price offers you an extreme discount or an extreme premium. If it's not offering you an extreme discount, right, that may be the minimum loss you can take on that trade. But when you're looking at a very low minimal loss, you're getting in at an extreme discount, like here, right? Coming down as far as buying off of this fair value gap, you didn't get an extreme discount, right? It didn't come down to the extreme discount, right? Buying off of this fair value gap, it came to an extreme discount because we came almost to the low of it, right? We came almost to the low of it. But since it's got stacked PD arrays, right, your stop still, your mandatory stop for this fair value gap is below that candle from the 5th based off of how this is. So you're getting the extreme discount based off of this fair value gap, but that's still a pretty large stop loss, right? For the overall imbalance in all, an extreme discount would be below this lower quadrant right here, right? It will be below that lower quadrant, and your required stop would be below this down close candle there, right? Now, that's an extreme discount for the entire imbalance, but that's still a pretty large stop loss, right? So the amount of risk doesn't guarantee it's going to be minimal because you're getting in with a fair value gap that lines up liquidity, because you got a mandatory stop based off of all PD arrays, right? Based off of all PD arrays. So relative to the first touch, right, this is minimal risk. Whereas if you enter long soon as it touches it here, right, and based off the overall imbalance, right, the stop will go there. Based off just this PD array here, your stop goes there, right? Now the difference is, yeah, it's a smaller risk than if you enter, just say here, right, and your stop was there, right, because it's inside the volume imbalance of that first thing. That's a smaller risk, right? That's minimal when it comes to compared to that, right? So, like I say, it's a lot of things that, right, it's not as simple as yes this or yes that, and yeah. All right. Okay. I think I'm tired now. Who's that just came in? I heard somebody come in. Who just came in?
I came back in.
Oh, that J-Rock came back in. I think I'm tired now. I'm done talking. It's 8:22. We've been on here for a long time. All right. All right. I'm locking the sheet. Everybody that's on the sheet is on the sheet. While I get my stuff together, y'all listen to my song.
Don't sleep. Don't sleep. Wake up.
Don't sleep, wake up. I said don't sleep, wake up. Don't sleep, wake up. Cake up, my bitch study. Make up, I can't ever fake up. Yeah, I feel my break going down. No, I'm dead wrong. Lately, I've been moving down. Looking at the past, asking what have you become? I feel like I've been stuck, I need to tell you something. Nah, I can't even tell
got beat.
Yeah, you. Turn around, tell her
Are you from New York even?
In New York, I merely rock. Hiding in my socks. Running from a up. And I shoot at up. What? And I'm on the block. What? Soon. I try to get in the past. She got a man soon. I do where she stand. We gotta stay tuned.
All right. Third and final giveaway for what I missed. Did I miss something? Third and final giveaway. Man, I'm tired, y'all. Here we go. Last giveaway for
Freebie Friday. Freebie Friday.
but on a Thursday.
Freebie Friday. Freebie Friday.
But on a Thursday. Somebody give me a drum roll, please. Somebody give me a drum roll, please.
You want to keep that one?
Somebody give me a drum roll.
Bam! Boop!
It is rigged. It is rigged. It is rigged. It is rigged. Can it be? Back to back like Drizzy and what's the dude name from Philly? What's the guy name from Philly with the braids? He used to have Meek Mill. She went back to back like Drake and Meek Mill. And both times she did the drum roll. Y'all give it up for Yolanda. Y'all give it up for Yolanda winning 2 of the 3 Apex account giveaways. Shout out Yolanda. When Yolanda get the payouts, lunch is on her. Lunch is on her when she get the payouts. Let me where we at here? How do I? All right. I don't want to compose a new one. I just want to reply to this one. Oh, there it is over there. I'm just tripping. All right. This is crazy. This is crazy. This has never happened. This has never happened. All right. Sin. Okay. For those who won, you have let me know if you I see some people were saying they got the emails. Thank you for letting me know. In the email lets you know everything that I said is good for any size standard account. Also in the email, it lets you know the day you need to use it by. They expire. The codes expire. And it has the expiration date in there. Once you redeem it, it's good for 30 days. You got 30 days to pass it. Right? If you don't pass the account in 30 days, the account just goes away. Apex does not do subscription models anymore. If you are interested in trading Apex, right, I appreciate you if you use my coupon code BIGSPIDER, BIGSPIDER, BIGSPIDER at checkout to get the best deal they got available. Right now they're running 90% off all of their evals. I personally feel like the best bang for your buck is if you bundle 5 of the end of day trailing drawdown. If you bundle 5, you can get 5 end of day trailing drawdown 50K accounts, right, at $89 a piece. If you do one account at a time, with 90% off, right, you pay for the eval, then you pay for the assignment fee, right? And the cheapest you can get the 50K with intraday trailing drawdown, I think we looked at it and it was like $104 per account. So if you bundle 5, you can get the end of day trailing drawdown, no activation fee for $89 a piece. That's $445 all in, right? I feel like that's the best bang for your buck right now. The only other person that's coming close to that I know of is Traderfy. If you bundle 5 at Traderfy, I think Traderfy, they're a little bit more piece. They like maybe like 90 something dollars a piece, or even 80, yeah, like 97 or 94. It's like a few dollars more than Apex. And the reason why I say Apex is better, because Apex you can do up to 20 accounts. Apex you get 100% of your withdrawal up to 6 withdrawals per account, right? Traderfy does a 90-10 split, and you can only have 5 accounts with Traderfy. If you want to do more than 5 accounts, Apex lets you do that, right? Hey man, I appreciate y'all hanging out with me, man. This was another episode of
Freebie Friday. Freebie Friday.
But on a Thursday.
Freebie Friday. Freebie Friday.
But on a Thursday. Hey man, until the next time. Oh man, y'all enjoy your 4th of July, man. Tomorrow is a holiday, so I will not be seeing y'all. Tomorrow is a holiday, so don't waste your time trying to look at the market. The market will be open from 6 p.m. tonight. Matter of fact, it's open now, and I think they close around 12 or 1 tomorrow. I'm not sure. Wasn't really paying attention to it. I think they're closing around 12 or 1, but there's no New York session, so the price action that's going on right now in the futures, that's going to be counted toward Monday's trading, right? So don't waste your time. Have fun with your family, man. Be safe for on the 4th of July. If you're going to pop fireworks, please be safe. I don't even know if we're going to pop fireworks. I really ain't the mood, but we'll see. Anybody got anything for me before we go? Congratulations again for everybody who won. Y'all put some fire in the chat for those who won. Y'all put some fire in the chat for those who won, man. Somebody said Kendrick Lamar. Man, Kendrick Lamar and Drake, they made a song years ago. Then they started dissing each other. Matter of fact, Drake kind of, to be real, Drake kind of gave Kendrick like a platform to get recognized on, because Kendrick was like a little puppy dog just starting out, and you know what I'm saying, Drake was like putting him on songs and doing stuff with him, and Drake was like a juggernaut at the time. Man, y'all came straight sorry with the fire. I don't see no fire in the chat. I don't see no fire in the chat. Hey man, if you didn't win this time, hey man, stick around. Like I said, as long I reached out to my Apex liaison, and I told him every Friday I want to give away accounts to the community. He said it was a great idea. He happy about it. So as long as they send me the codes, I'm going to give it to y'all. I don't use any of the codes for myself. Full disclosure, I do not use any of the codes myself, right? If they give me a code to use for myself, I will let y'all know, hey, I got this for free, right? All right. Because I know people who Apex give them a free account. They give them a free account. They don't have to pay no activation fee or nothing. They give them a free account just cause being an affiliate, whatever. They have not given me that. I have not asked them for that, right? When people start giving you stuff, they start expecting things, right? So they ain't doing nothing for me. So they can't expect nothing out of me. You know what I'm saying? They giving it to y'all. And it ain't nothing but because they getting money. You see what I'm saying? They gonna get money. Yeah, they what they doing? They giving you a free account, and if you don't pass it, they ain't lose no money. But if you do pass it, they gonna get some money from you. You see what I'm saying? It's a win-win for them. Them giving you a free account, it ain't no sweat off their back. If you fail, they ain't never made. They weren't gonna get no money from you anyway. If you pass it, they getting money from you because you're paying the activation fee. So it's a win-win from them. So hey, that's why I say, look here, I want to give away free accounts every Friday. This is what I want. If you can accommodate that, let's go. He hit me back. Oh yeah, that's too easy. Sure. So that's what it is. All right. So make sure y'all tell a friend to tap in, or y'all can crab and don't tell nobody and keep the audience small so you got a better chance of winning. Like Yolanda won 2 of them tonight. Hey man, if all hearts and minds are clear, we gonna call it there. All hearts and minds clear? All hearts and minds clear? Going once? Steve? Anything? Yolanda? Anything? Kim? Anything? Rhonda? That rhyme. J-Rock? Deborah?
I'm good.
All right, Deborah, you working or you home?
I got the uniform on. That's all I'm saying.
Y'all bow your heads with me. Let's say a prayer for these people at the hospital where Deborah at. Dear baby Jesus. Hey man, I appreciate y'all for hanging out with me, man. And if I get on y'all nerve, if y'all don't like the way I run my channel, if y'all think, you know what I'm saying, I'm all BS, if you think I'm a grifter, if you think me and the gang don't know how to do the stuff that we talk about, I just want y'all to know that. And with that, we will come to the end of this Freebie Friday on a Thursday. And until the next time I decide to get on Al Gore's internet, yes, this is some. My name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just means Big Spider if you don't upload Espanol. Yo, y'all be safe out here in them trading streets, man. Gone.